First presentation that we have is the cattle market update. Dr. Derrell from Oklahoma State University, and looking forward to his comments and kind of figuring out what this cow market's going to do. And so visiting a little bit with him, I think we're in pretty good ride for a while, but understanding that it might get a little better. So Dr. Peel, we appreciate you being here, and we'll turn the mic over to you.
All righty. Thank you very much. Appreciate it. Good to be here this morning. Have a chance to visit with you a little bit. It's Saturday morning, relatively early. I'm an economist. I'm going to show you a bunch of graphs and things, and they may or may not mean a whole lot to you, but they remind me what I want to say. So the only thing I can promise you is that there won't be a test at the end. Okay, so we won't have a quiz when we're all done here, but we'll talk a little bit about this cattle market. We should have plenty of time to get to your questions and comments at the end as well. So we got a lot to talk about. Obviously, we're in the middle of some very challenging situations, and this will work better if I turn it on. You know, drought's going to be the main story, and I'll come back and spend some time on that, and then that's where I'm going to kind of end up. Obviously, we're still in the middle of it, so we don't know exactly how this thing's going to play out. But we've been in drought for a while, and there's impacts now. There's cumulative impacts from what we've been in, and again, we're sort of playing this out to see where it takes us. Cattle numbers are declining. I'm going to go through this in more detail. Prices are higher now than they were last year. They're going to keep trending higher. We'll talk about that. I'll talk a little bit about demand. You know, again, our focus is kind of going to be on the supply side a little bit more so, but obviously the demand side matters. We've got lots of questions, reasons to watch it. It's been strong. It's looking okay thus far. I think we're probably going to have some headwinds going forward that we'll have to deal with, but it really is holding up very well. And then, of course, you've been dealing with input markets that are really challenging. That's going to continue for the most part as well. Certainly the hay and forage situation will be an issue for the foreseeable future. So just a quick rundown kind of on where we are. The first few slides. So these are calf prices in the Southern Plains. You know, the blue line is this year compared to the dotted line from last year. We're well above and have been all year from where we were a year ago. We're trending higher. That's kind of an underlying theme, and we'll see that in several ways, and then talk about sort of where we go from here as we go forward. So the calf prices are higher. You know, one of the things that's been a little different this summer, normally calf prices peak in the first quarter, the end of the first quarter about, and then they go down kind of through the middle of the year, and they bottom about now in the fall run of the year. This year, calf prices actually moved kind of counter-seasonally higher through the summer. And that sort of speaks to the supply situation that we're in, the number situation. Again, the drought's been driving a lot of what's happened the last few months and will again for a while. But so we've dropped a little bit in the last month or so, but we've dropped from a level that was higher than you would have expected for this time of the year. So we're still in pretty good shape, and it appears we've already bottomed this fall. And this week, just got this week's summary, at least in Oklahoma, and you know, our prices have started to move back up, and I think they probably will continue to, barring any number of external factors that can impact things. Feeder cattle, the bigger feeder cattle, you know, they tend to go up through the summer. They don't normally go up quite as dramatically as they did this year. So again, they've been up there. They have dropped off just a little bit recently, but from a fairly high level, and we're well above where we were this time last year. Fed cattle markets, a little ways away from where I think many of you are operating, but obviously it's where these calves are all going to end up. And you know, we've had lots of challenges the last couple of years, but the bottom line is at the end of last year, we finally broke through some barriers, popped this market up significantly. We've been pretty flat all year, kind of trading sideways, not really following the seasonal pattern. And again, the fed cattle, kind of like the calves, typically peak in the spring and come down through the summer to a Labor Day low or thereabouts. We didn't do that this year. We kind of held steady through the year, and then recently we've seen that market start to pick up a little bit. So as we move in through the rest of the fourth quarter, I think we're going to see these markets probably build some momentum. I think there's a fair chance we'll see the highest prices of the year for all of these classes of cattle in the fourth quarter. Now, that's about as close as, you know, I've been doing this for a long time, and one of the things I learned about doing this for 30-something years is not to give you a price and a date in the same sentence. Okay, that's one of my rules. So I'll be pretty careful about that, but we'll talk about it as best we can. Box beef cutout, now we're getting closer to the consumer side of things. And, we had extremely strong demand last year, and we're off of that, but we sort of expected that. There was a lot of post-pandemic pent-up demand that played out last year and was kind of unwinding by the end of the year. This year, again, we've traded probably in as stable a box beef market as I've ever seen. That 5-year average red line would show you typically what we do going into summer grilling. We see that market pick up, and we didn't really see that this year on the overall box beef cutout. It's traded more sideways. It has softened a little bit until very recently, and just in the last few days it started to pick back up a little bit. So, you can think of it as demand has probably got a kind of a cap on it, or I've been calling it muted. I think there's some reasons why demand has got some upper limits, but it also has some fundamental support. It hasn't really dropped. And you could certainly, make an expectation with all the things that consumers are dealing with that maybe we would have seen a little bit more weakness in demand. It's held up pretty well. I'll talk about that a bit more as we go forward. Cull cow market, in contrast to the stable box beef market and fed cattle market, has been the most volatile I've ever seen it, but by and large at a fairly high level. All the more so when I talk about slaughter numbers and culling. We've put a lot of numbers through the market, and yet this market has stayed pretty strong. It's dropped a couple times and then bounced back up. It did it in the midsummer when a lot of cows hit the market in July, but only for a week or two, popped back up. Excuse me, and then, of course, we're into our fall low. Cull cows typically, of course, have a very pronounced seasonal low in the fall of the year. As we get into normal culling, now we're not really doing normal culling this year. We've been doing unusual and unplanned and unwanted culling for many months now, but it's still that time of the year, and we're past summer grilling. So some of the meat market side, some of the hamburger market side of this market has backed off a little bit seasonally. So we are seeing these prices, seasonally lower here very recently. I'm sure you've seen this more than you want to, but and this thing has been, well, we'll talk about how long we've been in drought, but it's not very often in history that this much of the U.S. is painted with some color on this drought map. We've just got very, very widespread drought conditions. It's moved around a bit over the last, 30 months or so, but we've had a lot of drought. We're kind of right in the epicenter of it here right now in the southern plains, or at least in Oklahoma, southern Kansas. Texas was a lot worse a few months ago. Got a little help in the summer, but now dry again. It's just a lot of places. And if you take those colors and put them on a timeline, you can see that, the situation we're in now, really going back to the middle of 2020, is as long a drought and as bad a drought situation as we've had for as long as we've been doing the drought monitor, which is back to 2000. So we're in a very prolonged drought situation, and it's a big issue now. We're dealing with it now, but there are some cumulative effects. Last year it was a lot worse up in the northern plains, not so much in the southern plains. And then it sort of moves around as droughts typically do when they're long-lived like this. But the cumulative effects are very noticeable, and we'll talk about that briefly. There's a lot of lines on here, and we don't need to spend a lot of time on it. The red line is U.S. average pasture and range conditions. The black line was last year for those, and then these dotted lines are regional breakdowns. And the take-home message is pretty clear. From a U.S. average standpoint, we've been at basically record poor. Now this is percent poor to very poor, so the higher up you are on this, the worse off you are. And so we've been at essentially record poor pasture and range conditions on a U.S. average basis most of the year. We had a slight improvement, again, just for a few weeks. The second worst year in the data series was last year. So all of this is unprecedented by and large. And of course, if you look at it, the southern plains, which is, in this case, is Texas and Oklahoma, has been the the worst of the situation with the rest of the western states in there. We've got the southern, or the Great Plains, which is basically everything from Kansas up through the Dakotas. And even the Corn Belt, which is more of a crop issue than it is a pasture issue. But bottom line is we've had record poor pasture conditions. One of the cumulative effects of drought from last year and even the year before, but especially last year, was that on May 1 of this year, which is when the hay crop year starts, the U.S. average, or the U.S. total May 1 hay stocks were down about 7%, but if you look regionally, it was down a lot more in some regions. And so, again, the drought was much worse last year up here, so we carried over very little in the way of hay supplies. And generally in the U.S., hay supplies were tight coming into this hay crop year. Again, that's May 1. And then when you look at production, which is the red part of these bars, plus the May 1 stocks, that's the total amount of hay we have to work with for the rest of this year till next May. And it turns out that by just a little bit, the U.S. total hay supply for 2022 is the lowest in this data series that goes back to the 1970s. The last time it was close was really 2011 and 2012. We remember very well what happened then. And so we've got very tight hay supplies on a national basis. You can look state by state and the conditions vary somewhat, but generally there's no relief anywhere. We're seeing some hay move around, but not as much as we did, say, a decade ago in the last drought, simply because there's not much hay anywhere to be had, and there's not as much hay moving around. We've got record high hay prices. That's all this chart says, is that whether you look at alfalfa or all other hay, which is the way the data is broken down, we've got record high prices across the board in a very dynamic market, and it's going to stay that way. That's the short answer. There's no relief in sight, certainly before the next growing season. So we're kind of where we are for the wintertime. We've got to get somehow to next April, May, depending on where you are, when you can think about some sort of new growth. We look at the feed markets, again, supplemental feeds, to the extent that you have to use those, again, no help there. We're in the process of harvesting a fairly good corn crop, although it's gotten a little bit smaller in terms of the official estimates as we've gone through the last couple of months. But the bottom line is corn prices are high. That's going to keep all of these, whether it's byproduct feeds or any other supplemental feeds you might be looking at, they're all going to be expensive. So there's no real relief in that either, unfortunately. And certainly from a feedlot standpoint, cost of gain is very, very challenging. If you look at last year, the dotted line for 2021, we started last year with feedlot cost of gain in the low 80s, 82, 83 cents for steers. By the end of the year, we were up around $1.10. This year, we've continued to move on higher. This is actually just through August, and the latest data I've got here was over $1.30. I'm hearing $1.35 plus for steers, $1.40 plus for heifers in terms of cost of gain. Fed cattle market in the Southern Plains is about $1. Well, it jumped a little bit this week, but we're $1.46 or thereabouts. Cost of gain is $1.40. So there's not a lot of margin there, right? It's pretty tight all the way around. It's going to stay that way. I don't see any real change in that for the foreseeable future. Okay, so you put all of this together, and I'm kind of jumping ahead. I want to show you where the totals are in terms of meat production. We'll talk a little bit about the other meats briefly and demand, and then I'm going to come back and go to the supply side and go through that to end up, because that's really what's going to drive our markets here. But the bottom line is, for 2022, there's a lot of numbers on here. We're going to be at or perhaps slightly above last year's record beef production level. And this has been unusual, okay? I'm going to get into cattle numbers in a minute, but beef production we thought would start dropping actually last year. It didn't drop last year. We thought surely it would start to drop this year, and it hasn't. And of course, it's the drought driving that, right? The drought is forcing us to move cattle sooner rather than later. And so in the short run, we're holding up beef production temporarily because we're eating inventory. Right? And I'll go into that in some detail here in just a minute. So here's the story, really. If you look at that, You know, this is the total cattle inventory on the dotted line. So numbers peaked in 2019. We've been getting smaller, and we've been getting smaller at a faster pace in 2021 and 2022, and yet beef production has continued to go up. And so you can do that for a while, but you can't do that indefinitely, right? When numbers are getting smaller long term, it means we have less ability to produce at some point in the future. In the short run, we're eating that inventory. And so we're seeing record beef production for right now. That's about to change. Okay, and that's where we'll end up this story. Beef consumption is a measure of supply. Okay, and if you look at this chart, 2022, slightly lower than last year perhaps, but we're expecting it to drop in the next couple of years. Does that mean beef demand is getting worse? No, it doesn't tell you that. All that tells you is that we're not going to produce as much beef in the next couple of years. We can't eat it if we don't produce it. So by itself, consumption is not a measure of demand. It depends on what the price is that goes with it. And we'll get to that here. If we look at other meats for just a second, pork prices went up sharply last year. They've continued to work their way higher this year, the retail pork prices. Chicken, even more so this year. They went up some last year, have gone up more sharply this year. Retail beef prices are down slightly from a year ago. They actually peaked in October last year, but we have not dropped very much. We've just been steady, holding together. And again, that's actually pretty good when you think about the level of inflation we've got, the high gas prices that consumers are facing, all the challenges consumers are facing. The fact that retail beef has held up as well as it has is really pretty remarkable. Now, frankly, the other meats are helping a little bit. I've heard more complaining from consumers and food service people about high chicken prices this year than beef prices. Okay, now beef's more expensive than chicken, it always is, and that's because it's just a better product, right? It averages 3 times higher than chicken, and we don't have to compete on a dollar for dollar basis, but at some point we have to be a relative value. And what's happened is that as chicken prices have continued to go up, it's made beef look relatively better in some sense, and so that's helped us a little bit. Now again, we think about it, we've still got inflation, we've got part of this total, even though this is domestic retail beef prices, but part of the total demand picture will be trade, and I'll talk about that in a little bit. There's going to be some headwinds on the export side that will probably come to play. They haven't yet. So, there's reasons to keep watching demand, but it's been good, and I keep watching it, looking for indications that it's weakening, and I really don't find any at this point in time. Okay? We talk about how consumers, when beef is too expensive, they start trading down. So they buy more value-based products, not as much of the more expensive cuts. I can't find that in the data yet. It's not happening yet. And that doesn't mean it won't happen. In fact, I expect it will at some point, but it's certainly not happening at this point in time. Okay, a little bit on trade. This is annual totals, and it breaks it down by where that stuff is going. Beef exports, we set a new record in 2021. The previous record in terms of quantity was 2018. So you can see that, again, we did set a new record. The 3 largest markets are Japan, South Korea, and China, Hong Kong. And if you look so far this year at the total, we've actually been above it by a little bit. We've continued to move higher, which again is pretty remarkable when you look at, all things considered. There's a lot of uncertainty and a lot of macroeconomic challenges globally as well, and yet beef exports have continued very strong. So far this year, this is through August, we're ahead of last year's record pace so far this year, and it looks like we'll finish up here unless we run into some very severe headwinds late in the year. The dollar's fairly strong, quite volatile, but it's been fairly strong. At some point in time, that may have a bigger impact and be more of a headwind for us in terms of making our product more expensive to some of our customers around the world. One of the biggest growth, if you look at this year to date, one of the biggest changes here is China, Hong Kong. The 5-year average back here for the first 8 months of the year, and then last year started to really grown this year, and this is how that's happened. So we've seen a lot of growth in exports of U.S. beef to China, Hong Kong. We combine these markets because they're really not separate anymore, even though we get the data separately. When they were different markets, or at least officially different markets, they're not anymore, so you add the two together, and that's that market. And this is important. China has become, by a large margin, the biggest beef importing country in the world in the last 4 or 5 years. And we finally get to have a share of that. It took a little while for us to get into that market, but it's there. And so they represent close to 20% of our total exports now. And they're still growing, although somewhat slower. They could be our biggest market if nothing else changes dramatically going forward. We do import beef as well. The U.S. as a country is the second largest beef exporting country currently, and we're also the second largest beef importing country. Historically, we were the largest for many, many years. And so, you know, this is where it comes from. This is the last couple of years. We started out really big this year, but it actually has come down. We think before the year's over, we'll wind up with imports slightly higher than a year ago, but they've moderated significantly in the last 3 months or so of data here. A little bit on live cattle trade. We do import cattle from Mexico and Canada. We also export some cattle to Mexico and Canada. From Mexico, the cattle imports are down about 30% this year thus far. And in fact, when you look at the fact that we export, it's a smaller percentage, but when you look at the fact that we export some cattle to Mexico, when you net that out, net imports of cattle from Mexico this year will probably be the lowest since about 2008. So we're looking at significantly less inflows, net inflows of cattle from Mexico. Our cattle imports from Canada are up this year over last year. They were relatively low last year, frankly. And again, we exported quite a lot of cattle to Mexico or to Canada last year. That's off a little bit, but you know, it's more or less the usual situation there. We will see an increase in total from Canada, but total, when you add the two together, total cattle imports are down. Okay. There's a lot of numbers here, but you know, whether we look at all cattle and calves, or I'm really going to focus on the beef cow herd because that's going to be our you know, main factory, if you will, source of supply for the industry. But either way, cyclically, cattle numbers peaked in 2019. Coming from a low in 2014, we had, after the last drought and after the aftermath of the last drought, we had a significant expansion to 2019. The current, or in this current cattle cycle, the peak calf crop was actually in 2018, coming into January 1 of 2019, and we've been getting smaller since then. So cyclically, we should be seeing, you know, over time that leads to less production of beef. And again, we've already seen that hasn't happened yet, but it's going to catch up with us. Beef cow herd, from that peak in 2019 to where we started this year, was down almost 5%. I forget, 4.7, 4.8%, I think, if you figure that out. Just last year alone, it was down 2.3%. We also had a mid-year number. I don't have them up here. July 1, we were down about 2.4% on the beef cow herd. Beef replacement heifers were tighter in January, down over 3%. They were down over 3% in July. So there's less heifers out there. I'm going to talk about that because what's happening now to us is pretty dramatic in terms of not only what we're dealing with right now, but the implications going forward. Here's the beef cow herd specifically. So you can see the inventory from the peak in 2019. We've been dropping. We've dropped faster the last 2 years, and cow slaughter has accelerated sharply the last 2 years. And I'm going to come back to that in a minute. It's kind of hard to figure out what order to put all this in, but let's change to the feedlot situation. If the calf crop peaked in 2018, that should lead to tighter feeder supplies. Eventually, that should lead to less cattle in the feedlot. Yesterday, we got a cattle on feed report, And finally, for the first time this year, the cattle on feed inventory is a little below a year ago. I've been expecting for several months to see this thing start coming down. I've been wrong for 6 months, but the drought's been worse than I thought. That's my only excuse. It takes longer to turn the corner, but I think we are turning the corner where we will see this feedlot inventory start to tighten up significantly. Because of the drought, last year and this year, we've maintained more cattle in feedlots, again, because we simply didn't have another place for them. So calves in general and heifers specifically, we've moved more of those cattle into the feedlots. So this thing finally turned. Placements were down yesterday in the cattle on feed report, about 4% from last year. It's the first time in several months that placements have been lower on a year-over-year basis. So, you know, again, we've been sort of defying gravity here by finding cattle to place when there really weren't more cattle. And you can do that for a while, but you can't do it indefinitely, and it's catching up with us. If you look at heifers on feed, we get a quarterly number, and yesterday was the October 1 number for the fourth quarter. We have well, at least as far as this graph goes, a record percentage of the feedlot inventory is heifers. And that's been true. Well, the percentage is actually a record now, and it was high in July as well. And so that's a testament to the fact that we are having to do some things because of the drought that we would not normally do and really do not want to be doing, but we don't have a choice. So cattle slaughter, so far this year, again, you think about it in the bigger picture, steer and heifer slaughter should start to go down here at some point. So far this year, the total is up less than 1%, but it's up. Heifer or steer slaughter is down. That's consistent with what the real number situation is, but heifer slaughter is up 5% so far this year on a year-over-year basis, and last year for the whole year it was up 4%. Okay, so we've moved a lot of heifers into the feedlots, through the feedlots. That inventory number we just looked at says there's still quite a few heifers in the feedlot. We're continuing to have to do that. So, you know, total fed steer and heifer slaughter has not dropped yet. It will going forward, and I think we'll see it here in the next, before the end of this quarter, before the end of the year, we'll see that start to tighten up. We expected it to be lower basically all year, and we've not been able to see that turn yet. On the beef cow side, so far this year, beef cow slaughter is up almost 13%. And it's working its way slightly lower. It started out at 15 to 16% above a year ago, and it's come down a little bit, but it's going to end the year double digits % increase year over year, and that's on top of a 9% increase last year. We've slaughtered a lot of cows in the last 2 years. We've slaughtered a lot of heifers in the last 2 years. See that here if you look at this weekly cow plus heifer slaughter chart. It's been well above a year ago virtually all year. In fact, so far this year, and it looks very much like we'll end the year with female slaughter right now represents 50.9% of total cattle slaughter. Over half of all of the cattle we've slaughtered in this country this year have been female. That has not happened on an annual basis since 1986. It was the last time we had female slaughter over 50. Even in the drought a decade ago, we didn't get that high. Okay? So what I'm telling you, this is a pretty significant situation, not only in terms of what's happening right now, but again, the implications going forward are pretty dramatic. From a herd culling standpoint, if you take that beef cow slaughter as a % of the herd size, we're going to be at least 13%. I think it's going to be more closer to 13.5% net cow culling this year on the beef herd. Again, go back to 2012, we didn't get that high. Okay, it'll be a new record in any event in terms of net cow culling. This thing averages over time, if you sort of average that out, of course it does have a cyclical nature to it, but it averages a little bit below 10%, around 9% is the long-term average for net annual cow culling. Again, we're going to be at a record level of 13% or a little higher this year before it's all over with. So, if you think about, again, our cattle cycle, which happens without the help of drought, but the last two we've been in, drought has exaggerated. It exaggerated this liquidation. These yellow shaded areas are the expansion phases. So I highlighted them to kind of focus on that. Here we are. We went from 2014 to a peak in 2019. We've been getting smaller. I'm here suggesting that by the end of this year, we're going to be pretty close, plus or minus where we were in 2014. And we got there because of the drought in 2011, 12, and 13. That was smaller than we wanted to be. It was smaller than we needed to be. The market told us that, okay? And that's what's happening again. We're setting ourselves up to be smaller than we need to be. And at some point in time, the drought is going to change, and we're going to think about what happens after the drought, and there's going to be a significant need to rebuild in this industry. How does that herd expansion take place? So what happens? I'm already thinking ahead to post-drought. We don't know where the drought's going to end. I wish I did, but we're still in it. But at some point in time, we're going to move past it. So how are we going to go from wherever we end up here at a low to rebuilding this thing? Well, it happens primarily with two things, right? We save a lot of heifers. So this blue line, which is replacement heifers as a percent of the cow herd, after 2014 low went to a record high in 2015 and 16, we saved a lot of heifers, and we will cut cow culling. We've been at record levels of cow culling the last couple of years. In 2015, cow culling dropped to a record low. Right? And we've certainly culled plenty of cows. We have a year or two here where we don't have to cull any if Mother Nature will give us a break. Right? And so we could see cow slaughter drop by 20% on a year-over-year basis next year. Pretty easily, which is pretty big implications from a meat market side. Heifer retention, you remember what happened in 2014, 2015? Pretty much every heifer that was breedable got bred. We're going to do that again. All right? At some point. I don't know if it happens next year. It might be the year after that, but every heifer upright, holding a constant temperature is going to be a replacement heifer for somebody. Okay, that's what we're heading for. So what happened when you save all those extra heifers, when you cut cow culling, the sum of those two meant that in 2015, total cattle slaughter dropped to the lowest level since 1963. And beef production dropped to the lowest level since 1993 that year. And of course, you know what happened to prices, right? If you look at annual average prices, the drought was here. This was after the drought. We've already built in an uptrend just because numbers are getting tighter. Okay, we're higher this year than last year. We're going to be higher next year regardless. But, and you can see that uptrend that we've already built into the market. It's in the futures market already, to some extent at least, right? So yesterday, feeder cattle futures, the nearby was at 175. Look at these deferred months. 178 November, 180 January, 182 March, 189 May, $2 in August, 201 in September. So from right now, what is that? $26 built into that feeder cattle futures market between now and next September. The market's already priced in a fairly significant uptrend in this market. And interestingly enough, at some point in time, that's not going to be enough. We're very likely to repeat something like what happened in 2014 and 2015 at some point in the next 2 to 4 years. When we get into that real squeeze of trying to rebuild the herd, the implications for beef production, We were wrong last year, beef production didn't drop. We were wrong this year, beef production didn't drop. It has to drop at some point, okay? And it could be more, it won't be less dramatic than this, it could be even more dramatic than this, but we're talking about over the next couple of years, a fairly significant decrease in beef production. Okay, beef prices are relatively high. Go back to the consumer side. People say, can beef prices go any higher? Well, when there's less beef, they can. Right now, they're staying pretty high, and we've got record level of beef production. That's a good sign for demand. They can go even higher, recession or not. I don't know if we're going to go in a recession or how bad it'll be or how long it'll last. Beef prices will go higher when there's less beef. And there's going to be less beef going forward. That's the market's job, is to figure out who wants it the most, right? And make sure we don't run out. The way we don't run out is price it so some people decide they don't need it right now. All right? So that's kind of the situation that we're set up for at this point in time. We got plenty of time for questions and comments. I'm used to doing this. Actually, you guys gave me a whole hour, and I don't get that very often. But there's no point in dragging it out unnecessarily. I could have put a whole bunch of other stuff. I started this morning with 170 slides in this file, and I cut it down to, I don't know what we went through, 40 or 45. There's lots of things we can talk about, but I'd rather talk about what you want to. Anybody have any questions or comments?
Drop-off in Mexico imports. Do you think that that's due to them exporting to other countries?
I really think it's probably due to them using more domestically. Their domestic industry, as you know, has developed significantly in recent years in terms of their cattle feeding industry, their packing industry. And we predicted a number of years ago that there could come a time when they would be less dependent on that export market from the standpoint of their whole cattle industry. I think that's what we're seeing. It's a little early to call that for sure, but I really think that's probably what's happening. So we're talking about this year maybe bringing in a net exports minus import, or imports minus exports, of maybe 700,000 head. It's averaged 1.12 million head for the last 20 years. We're about 1.2, sorry. I rounded the wrong way. Yes, sir?
So what is China taking? What product is rapidly increasing?
What product is going to China? First of all, that's a really good question in terms of recognizing that when we get particularly to the trade stuff, beef is not one thing, right? We talk about beef demand as one idea, but it's not. It's hundreds of different markets for different products, and that becomes particularly important when you look at the trade stuff. China is by and large a low-valued market in terms of the growth that we've seen. They're starting like a lot of countries do. Now, there's been a small component, and still is a small component, that's kind of high-end, you know, sort of business, tourist restaurants in places like Shanghai. But to the extent that this market is growing to be a more broad-based market in the country, then it's going to be more of a value-based market. So it's developing at this point in time a little bit like Mexico did about 25 or 30 years ago, where we started with some, you know, tourist trade. We used to, 30 years ago, we used to say that our beef exports to Mexico were just selling to U.S. tourists that happened to be in Cancun or whatever, or business guys in Mexico City. And that's kind of where it started, but it has grown from there to be a much more broad-based market that really focuses on lower valued products, things that have more value there than they do here, which is the value of trade, right? China's evolving kind of the same way. And you have to recognize that China is still, beef is not their main meat and won't be for the foreseeable future. It's grown, but per capita consumption is not that high in China. It's roughly maybe 11 pounds per capita to our 58, right? But the thing you have to keep in mind about China is what I call the law of Chinese markets. You know what the law of Chinese markets is? You need to remember this, because this is going to affect a whole lot of markets for the foreseeable future. The law of Chinese markets is any number times 1.4 billion is a big number. So they don't need to eat tremendous amounts more. They don't have to double consumption. If they eat 1 pound more, that's a bunch of beef. And that's how they went from not being a factor in global markets 8-10 years ago to being the biggest market by 2.5 times over the U.S. as a beef importing country in about 5 years' time. And that was probably done on 2 to 3 pounds per capita growth in consumption in the country. Other questions, comments? That was a lot of stuff for early on a Saturday morning. Yes, sir.
So we've got all these new packing plants that are coming about. That's a bit of a dilemma, but we should start looking at finding numbers and increase that.
Right, okay, so the question is, we do have a bunch of proposed new packing plants, some underway, some not yet underway. And yet what we just talked about is the fact that cattle numbers are going to be tight. We're not going to have a capacity constraint with the current industry for the foreseeable future. So timing is obviously critical, and it's a challenge for anybody in that because we're going to, anybody opening a new plant in the next 3 years is going to face limited cattle supplies, continuing labor issues, all of the other challenges that go along with whatever size plant we're talking about. So it's going to be a real dilemma. I mean, it depends on where you are and how you're doing things. Those plants they'll be around for somebody, but I hate to say this because I don't want to sound overly cynical, but economists are kind of a cynical bunch at heart anyway, I think. We usually say it's about the third owner of a packing plant that makes it work. And we've got history on our side. So that's just to say that there's lots of challenges for anybody that wants to open a packing plant anytime, but especially maybe in the next few years. We're going to have the same problems we've faced the last 2 or 3 years in any event. Even without any new capacity, we don't have a capacity problem for the foreseeable future. Now, someday we're going to need that additional capacity, and I'm glad to see it coming on. Okay, however it turns out and whoever winds up doing it, I think in a decade we're going to have a need for that because I think there's plenty of potential for this industry to grow longer term, but in the meantime we're going to go through this cyclical, drought-enhanced, tight supply situation for the foreseeable future. Yes, sir.
Walmart going to be killing all their own cattle processing?
Yeah, is Walmart going to be killing and processing all their own cattle? No. Walmart has no intention of getting into the processing business. Now, they're going to partner with some people that are processing, so they're going to have some business arrangements with folks. They're not going to own packing plants or processing facilities other than in some sort of joint venture kind of a thing. Okay, they have a partnership now. I think they are a part owner of that further processing facility in the southeast. It's somewhere in Georgia to get a specific brand line in their thing. And they've got some sort of arrangement with this new proposed packing plant in North Platte, Nebraska. Okay, but it's a business relationship. It's not that they're trying to get into processing business. At least that's the way I see it. They don't tell me, of course. I don't, they don't volunteer information to me, but. Yes, sir.
I feel like the price of beef in the grocery store is ever going to get to the point where we price ourselves out of the market.
Will the price of beef at the grocery store get to the point where we price ourselves out of a market? No, I don't think so. Again, beef it has to stay in balance relative to other proteins, and it does. But it won't continue to go up unilaterally to the point where nobody buys it. Okay, it just won't do that. Okay. That's the way markets work, right? Now, it's a complex industry, so there's a lot of things attached to that. But, we're going to have beef. Probably you're looking at the demand side, and that's certainly, we need to be aware of that. We need to be aware of that situation. what you're sort of asking is, are we going to have a beef industry?
You take the cost of feeding a calf right now, getting it fast finished. There's lots of people that can't afford to buy that calf. They want to process it themselves. You know, and that smaller market that some of us are in, it's got to the point now where we can't finish these cows because there's no one willing to pay that at the end.
Okay, I see where you're asking from. You know, that's a particular location, a particular market, or whatever. That's, you know, that's a situation specifically in a certain locale, but that's not the issue really for the market, broadly speaking. No, the other thing I was going to say is, to the extent that concerns about consumer demand translate into, do we have a future as an industry? I've maintained this forever, and I still do, that as long as cows eat grass, we will have a cattle industry. And pigs and chickens don't eat grass. That's ultimately what makes us competitive as an industry. We do lots of other things around it. We're going to finish cattle to get the kind of meat quality we want and other things. At the end of the day, ultimately, the fact that cows eat grass, and we have lots of grass in this country, means that we'll have a cattle industry as long as we continue to adapt to be competitive within that framework.
Not only that, beef is the most protein-like, most nutritional out of the proteins that are out there on the market.
It is. I mean, beef is, so his comment was beef is you know, extremely densely packed nutritionally, and it is. And it's not so much even just the U.S. market. That global market is enormous, as evidenced by our conversation about China specifically, but more broadly even than that. Yes, sir.
Any pressure you see coming from big meat, products you're trying to come up with?
Okay, fake meat, is that going to be an issue for us? I think not significantly. Okay, I don't think it's going to go away entirely. There's been a small market. It's there. It's probably not going to go away. I don't see it growing significantly relative to the broader beef market. Okay, and it looks to me like right now a lot of the initial flush of that and the interest in that and so on is actually going backwards. I think it's settling into something of a reality now of what that market really is once the novelty kind of runs off of it. And so I don't see that as a major threat. You don't want to completely ignore it, but you know, as long as they're trying to be like us, I figure we're pretty safe. That's kind of the way I look at it. If they wanted to come up with some whole new product that they didn't try to mimic something we've got that's better, then that might be a bigger threat. That's a fairly simplistic view, but that's me. That's where I live. Any other questions, comments? Yes, sir.
How do you see beef imports going long term?
How do I see beef imports going long term? As long as we have the hamburger market we have in this country, we're going to need to import some beef. Okay? We would be a lot smaller as an industry if we did not import beef as well as export beef. In fact, I just helped do a study with Glenn Tonzer at K-State, and we were specifically asked to evaluate the implications of eliminating trade in the U.S. beef industry, and the bottom line is it would cost this industry billions and billions of dollars if we did not trade. Opportunity to be here. Hope you have the rest of your convention goes great. It's good to see you guys and welcome you to Oklahoma City.
Thank you, Dr. Peel, and